Well, it's really it's been a really good day for a really good week where this market has exhibited a whole lot of grit, right? Fighting off daily attempts to pull it down, attempts that a week or two ago would have simply taken it down much further. Now, I think there's several factors for today, including positive reactions to key earnings reports. But what really I think is happening is we're seeing more aggressive investors trying to position themselves ahead of next week's CPI report. Now, if that release comes in below consensus, I think it could trigger a monster relief rally. So the positive signs this morning, well, we saw China's CPI for August. It was 2.5%. That was down from 2.7%. By the way, consensus was 2.8%. Then Kroger reported. They said supply chains are improving. Management there sees inflation moderating. There are also a lot of other signs and anecdotes that inflation has indeed peaked. If that is the case, is that the buy signal? Joining me now to discuss SureVest CEO Rob Luna, Optimal Capital Director of Strategy Francis Newton-Stacy, along with Kingsview Wealth Management CIO Scott Martin. Rob, I'll start with you because you were already a buyer, but there's a lot of folks on the fence. The risk-reward dynamics right now, if someone had been waiting on the fence of going in before the CPI report rather than waiting for after.
Yeah, look, I'm not a short-term trader, Charles, but I think this is a great opportunity for people who have a 1-2 year time horizon. Look, we said before Jackson Hole, after that big rally, if we were a little bit too hawkish like Powell was, expect a 10% pullback. Well, we've pulled back 10%, and to your point, what we're trying to do now is get ahead. Look at gas prices, look at shipping prices. These are leading indicators. Those are coming down. So where do you want to position yourself? You want to be looking at those growth names now that have pulled back, big names down 40, 50%. If you're an investor long-term, that's where you have to be right now.
Scott, what are you doing?
I agree. I'm agreeing with Rob is what I'm doing and nodding my head because he's right. And Charles, to your point, waiting for CPI, you're just asking to miss something more. I mean, I think like if you're an investor here, and Charles, we've been talking about this on the show, been talking about it with our buddy Neil Cavuto, it's always darkest before dawn. To Rob's point, if you're a long-term investor, even if it's a year, 2 years, 3 years, 5 years, like, what are you waiting for? You're seeing names come back all the way down, 50%, as you said, 60, 70 in some cases. And if you're waiting for CPI to tell you that the coast is clear, if you're waiting for a godsend of commodity prices to show you that all of a sudden the commodity prices are off their highs big time, then you're going to miss the whole thing. So buy before CPI. And if the CPI is hot, fine. Then guess what? You've got to layer more in because CPI is near peak or at peak or has been at peak, and it's going to start coming down, and that gives the Fed the chance to stop hiking interest rates sometime very soon. All
right, well, but there are risks out there, and you just alluded to the Fed, right? So pre-open, we had this big rally. All of a sudden, it almost all went away. What happened? James Bullard, right? By the way, I'm calling him the Lee Van Cleef of the FOMC because every time the market starts hinting that it wants to go higher, you can hear that Sergio Leone music, and he turns around the corner and shuts it all down. That's the dilemma, though, in my mind, is that they keep the pedal to the metal too long. The economy's slowing, inflation comes down, and they actually push us into something we really don't want to be. I'm loving the action, right? I love the minutia of the market, right? I mean, this is what I live for, right? And what I'm watching is last week, those SaaS, right, the software as a service names, they were annihilated. Oversold, though. Look at it today. DocuSign, Zscaler up 34 bucks. You know, Scott, a whole lot of other things are making big moves, particularly oversold things. So you talked about being in this market. Do you want to do bottom fishing, or do you chase the things that have already gone up?
I wouldn't chase, and there's tons of stuff to fish off the bottom. I mean, as an investor, like, you can't be crazy, though, man. Like, we invest money for a lot of clients, as you know, and clients don't want to buy stuff that's like 10% off the bottom. And I'm like, okay, it's down 40%. Like, NVIDIA is up big today, right? They don't want to buy it all of a sudden yet. You didn't want to buy it yesterday when I told you to. So you just have to really take stock of where things are and know that, like, in the long term, like mid to long term, things are going to be okay. These are generational almost buying opportunities with some of the other companies named. Splunk is another one that's just gotten absolutely slammed. And those are areas that I think you got to start looking to buy into here.
Never look at my own account. My broker just calls me up. I don't. I tell you what, though, I scored big time so far because right before June, I loaded up on Etsy and Roblox, and I did see him go across the tape. I'm up huge, but I tell my guy, call me every time they're up at least 100%. So I don't get a lot of calls.
I was going to say, rents aren't going the right way, Charles. One thing real quick, what makes me nervous is everybody starts turning bullish here after they get the picture. That would be scary. Stay bearish because that's what makes the market goes up.
I was just going to say, the things that scare me is I'm getting a little bit too excited right now.
Yeah, dude.
Rob, Francis, Scott, have a great weekend. Thanks a lot.